Alright, chat. So the long-awaited video is finally here on the VIX and the TPO profile from Thinkorswim. This is going to be my main bread and butter and what I use pretty much to come up with my analysis beforehand, intraday trading, and all that types of good stuff. So I'm going to break down this video into two parts. This part, there's just going to be a general understanding of what the two things are. And then the second video, I'll show you guys how to use it, how to mark out the TPOs, and all that types of stuff. So first, we're going to go over what the VIX is. The VIX is going to be our volatility index for the S&P 500. The S&P 500 tracks pretty much the 500 largest, most influential US-based companies, such as Apple, Nvidia, pretty much the whole Max 7 is a part of that. So with that being said, we can use the VIX volatility index for that to help us determine pretty much bias of price or where price wants to reverse and continue at in pair with the TPO profile. So in general terms, for now, when the VIX is spiking or going up, and when the VIX is going down, it pretty much will do the opposite in terms of our index and what direction it's going in. So if the VIX is starting to move up, we should start to see some downside coming from the indexes such as the S&P 500, Nasdaq, um, and obviously the companies that are coming from it. And then when it moves down, we're expecting bullish price action coming from the indexes. So obviously you see with this pump here that we pumped to $28.99. This is when we had a major dump in from the indexes last week. Even here, so every single spike that you see here was a decent dump that we had from the indexes, and then every time we move down, it's either a recovery or us pushing back up to those all-time highs and creating that. So with that being said, the way I kind of like to look at the VIX, because I know you can go on the 1 minute, right? You can go on the 1 minute, use it for intraday, and you can be like, okay, the VIX is starting to form a downtrend and trickle down. You can use a continued downtrend on the 1 minute, yes, to confirm your trade from the index if you're trading ES or NQ. It honestly just depends. But for me, and the way I like to look at the VIX is I like to look at in the whole um, price ranges. So what the price range means is, for example, here, when we were down in the $16 range or anywhere near this range is when you pretty much want to start looking at long entries, right? That's when the market is pretty much in a bullish trend. Right now, with the big dump that we had to $28, you can see we are far from that $16 range. But now we're starting to see that recovery come back down into the 20s. So if we can make our way back down to 19, 18s, this should put us back at all-time highs if we continue lower. That's how I like to use the VIX, just in pretty much a whole range of price to determine that direction from the index. So in cases like this where we're in like these high 20s, we can start to see a lot of bearish movement and sellers come into the market when the VIX is trading at these highs because of the volatility just being there. Um, so with that being said, you can see here on the 30 minute. So 30 minute is the main time frame that I like to look at the VIX on, mainly because it's very good with the TPO profile that we have. And also, I just get a really good general um, idea of where price wants to go when looking at the 30 minute. Because, for example, right, I can zoom in all the way to this day right here. This was Friday, I believe. So, Friday pre market, right? We did have a pump all the way to $28.99, right? That was a pretty big dump. That's why we had spiked all the way up here. But since we had swept those lows on the index, we started to come down, right? We started to form a very hard downtrend coming all the way back down. So this move up was already irrelevant. It would mean something else if the VIX decided to, have a little retracement and stay within these high 27, high 26s. Then we can start to seek lower. But the fact that we had dropped all the way down here going into pre-market is a really big, you know, indication that we should no longer be looking at shorts, because if we did, we should be, you know, stuck within close to where we made a high at on the VIX. So since we had came down all the way to support, if you were looking for downside, you are pretty much just looking for a bounce off support and us continue higher and higher. But since we had dropped this low, I wasn't really looking at shorts anymore. And you can kind of see like we were testing it, but we weren't really like getting an initial break anywhere. We kind of just stayed within these 24, 23s up until we did decide to break down into 23s, and then this is when you should be looking at longs, because obviously you can see that we're already forming a downtrend on the VIX, and that the VIX wants to dump and break the support after being tested one, two, three, 4 times and not continuing higher. You can see the break, and then you get into longs, confluenced with whatever model you're trading, and then the longs hit, right? You see the volatility um, come into the market, and then we dump, 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 right? And that's how you would generally get um, your directional bias, pretty much if VIX is going up or down, and then you use that to your advantage. So with that being said, it's pretty basic in terms of what the VIX is and how you should be using it, right? Up, down, just means the opposite for direction um, with the indexes. But what I like to do is pair it up with the TPO profile. What the TPO profile is it stands for time price opportunity, right? So it kind of does, just by first glance, it does look a little like volume profile. It's a little similar, but not really. This is pretty much going to tell you do the low traded areas over the high traded areas, right? What that means is if there was a lot of uh, trading going on in a certain area, it would form in a type of TPO kind of like this. So like this whole section that's all highlighted blue. Not sure why this tool is not working, but you guys could get an idea with my mouse that this whole area would be a good traded zone, a high traded zone, rather than here, right? There's not that many trading going on up in here for the TPO to mark out, so that's why it is gapped like this, right? And what I like to do with the TPO profile is I like to see where the VIX is, whether the VIX is bullish or bearish, what ranges we're going through with the VIX, and where is the TPO profile sitting at, whether it's a high traded zone or a low traded zone, to see if the VIX wants to play into those areas. And that's kind of what I'm going to be going over in the next video, is I'm going to show you guys how to figure out if it wants to play into those areas and how I like to mark out those areas. So first, before I even go into that on the next video, for now I'm going to show you this. So the TPO profile on Thinkorswim is going to load different uh, different areas based off of how many days you're loaded in. So for example, right, I'm on the 30 day, 10 days. So right now this TPO profile is coming up with 10 days worth of price action, right? So the past 10 days, this was the low traded area, this was a low traded area here, here, and then this is where most of the trading was going on, and that's why the TPO formed like this, right? But if I scale and load up more days, right? Let's say I go to the 30 day, right? Now it looks like this, right? We still have this low traded area, right? Because it's pretty significant, but you can see the tops kind of changed because it's loading up more days that the VIX had came up into here, right? Same thing if I go from the 30 day and I scale all the way to the 360, right? Now it's loading up a whole 360 days worth of TPO profile, right? That's why if I was on sorry, I'm actually on the I was on the 1 hour. So if I was on the 5 day, right? You can see when we made this high at $28.99, the TPO cannot load anymore. It can't go higher than this because it's only loading 5 days worth of data. So what you need to do is you need to scale higher up until the TPO does load up that data. So for instance, since we had this pump, let's say this pump from the VIX were to happen intraday during a trading day, right? You would have to scale higher to see and mark out these TPO profiles to see when exactly VIX wants to stop or what it's even drawing towards. Where is it going towards, right? Because looking at the 10-day, you can't really load anything past $20 because we haven't moved past $20 on the VIX in those 10 days. So you have to load up more days. And you can see here we played, there's all these gaps here, right? It's not the same as here because this is a general area of where the VIX likes to be. A normal range is like 21 to like 14s. That's a decent range for the VIX. That's usually where the VIX is sitting at, right? And then for me, like I like to be bullish below 16s and I like to be bearish above like 17s, 18s. That's usually my range, and for the experience that I've had using it, that's what I've seen from it so far. For the days that we just pump all the way past $20, 21, 23, that's when there's just like no reason to be looking at longs up until when the VIX just stops. And then we start to dump again and fall back into that bullish structure. So that's going to be pretty much just a general idea of the VIX, the TPO profile, and how you guys should be kind of looking at it. It doesn't really matter how you trade. You can trade my model, you can trade order flow, you could be trading ICT, support and resistance, supply and demand. It doesn't really matter. Using the VIX is going to be a very good tool for you, especially when you are coming up with your bias, right? Let's say you're an ICT trader and you're scaling from 4 hour to 1 hour, trying to determine your bias, right? You can also go ahead and look at the VIX and also do the same 4 hour, 1 hour, 30 minute, and come up with your own kind of bias based off of how the VIX was ranging either the past week, the past month. This is going to be a very big tool for you guys, right? This is pretty much how I come up with a lot of my analysis, and I'm usually, I would say, 85% of the time right about the analysis. And you can come up with a case for both directions, right? You can be looking at the VIX and be like, okay, for me to be bullish tomorrow, we just need to maintain above here, stay within this dollar range, and then you can long it, right? But if the VIX starts thumping and it's telling you otherwise, then you could just flip your whole bias as a whole and then start looking at the other direction, right? That's why it's going to be a very good tool for you to use because it's tracking the S&P 500, right? This isn't like some little index, right? This is the main index um, that's traded. So with that being said, I'll see you guys in the next video. If you have any questions, just feel free to DM me. You can even reach out to RJ. He has a pretty good understanding upon the VIX and TPO. But yeah.